This is AB Styles again, and I'm going to be breaking down a beautiful trade that cuts on BTC USD on May 27th, 2026. So, this is the weekly chart, and looking at the weekly chart, right, we can see that Bitcoin is bearish, right? Initially, it was bullish, no doubt about that, but then we switched structure after taking out these highs, and ever since then we have been breaking lower, right? We broke below this low, and looking at the current price action, you can see that we have broken below this low, so that's a market structure shift. But before then we had a sweep of liquidity, right? So buy side liquidity, and price tapped into a fair value gap. This is the weekly chart, guys. We do our top down analysis from the weekly charts because um we need to have a bird's eye view of what's going on in the market before we engage, right? So now looking at this price leg, you can see if I draw my premium to discount zones from this high to this low, right? We sell in premium and we buy in discount. You can see that price returned back to the premium, which is the red area in this zone. And in this red area, we have this weekly fair value gap. Price have tapped this weekly fair value gap and we are having bearish candles, right? So if I was to say the next zone or the next target for Bitcoin should be 59,977. So contrary to people's expectations that Bitcoin is going to, recover, I don't think it's not looking like that in the price action. It's not looking like so. I think that Bitcoin is going to drop lower in the coming weeks, right? Might swing around this point when you take out this low, but let's just watch what plays out. So what matters is we have tapped into a premium fair value gap on the weekly time frame, and we are now breaking low. So that is all the information we need from the weekly. So going down to the daily, we are going to be looking at the daily price action. Okay, so this is the weekly fair value gap that just got tagged. Price broke down below here, right? It traced a little bit, broke down, and then we can see that there's a sweep below this low after price takes out this low. You see that price closed with a wick. So one we expect that with the formation of this week, we can then recover, to continue the bullish trend. But that is only if we close above these highs, right? The last highs before that low. And you can see that we didn't do that, right? We fell short of that. That indicates that we are going lower. And if you are going lower, where can we target? You can see these two candles over here. That's an equal low. It's too smooth, so price usually, or the market maker usually attacks lows like that. And that was our target for the week. So coming into this week, you can see this is Tuesday's candle and this is Monday's candle. So this week began, this is Sunday. Okay, so this week began on Sunday. Now, after price has swept this low, we saw that price was trickling up, right? No fair value gap had been formed, so it didn't show any lack of it. It didn't show any intention, right? Price wasn't looking very powerful to me. But then on this day, you can see that price on Tuesday swept Monday's high and closed back within the range. So let's tag that a buy side liquidity sweep, right? Usually when we have price closing within the range, we expect a change in structure. So after price swept this high, the next immediate target was this low and ultimately this equal low right here. So on this day, Tuesday, I was already bearish on Bitcoin. I was just looking for price action to confirm my bearishness so I can go short. So on the 1 hour, taking this trade was on Wednesday, not Tuesday, right? Tuesday didn't give me an entry. So this is Tuesday's price action. I'm going to mark them out with my candlesticks right now. This is Tuesday, right? Tuesday swept Monday's high, closed back in the range. And if this is a good area to sell, right? That's another block. That's another block. Price closing below this up close candle. You can see this is a fair value gap that just became an inverse fair value gap. So for the IVG traders, this is also an IVG. Price close below it, so that confirms a change in trend, and one could have easily taken a sell from this region, but that was not what I took. I waited until the next day, Wednesday. So Now, coming into the day on Wednesday, this is the 27th. Wednesday the 27th, right? These are the equal lows I marked out on the daily chart. There's this dark line. You can see equal lows right here. Wednesday price, we are expecting bearish price action, right? We are very, very bearish, and price has to take liquidity before it continues its move. Where can it take liquidity from? We have equal highs, we have fair value gaps. So in this case, we can say that there's no fair value gap around this region, and we don't expect price to get to this level because the market makers are in a hurry, right? The market's in a hurry to get down to that liquidity resting below. So we don't expect deep retracement. But then we have these highs, right? This sort of equal highs, you can see it. So these equal highs formed in the Asia session is buy side liquidity, or you can just target liquidity. Anyways, you have buyers, you have people who are expecting to catch the breakout trade, so they have their entries over here. You have people who are selling from this level, right? And they were trading their stop losses. They get their stop losses here. When price broke below here, they saw that this high was protected. So they moved their stop loss to this high, and then price went lower. So price immediately went back and took them out, right? It fixed them in first, right? So that they can see that this level is holding and they can increase or put their stop loss in this level. Then it went down and then swept them off immediately. And that was enough for liquidity for price to continue downwards. So upon the sweep of that high, right, on the 1 hour this week, we then wait for price to give us an entry on the entry time frame. My entry time frame is the 15 minutes. Okay, so this is the 15-minute time frame, and you can see that if you had tried to take an order block entry right here, you would have missed this trade. Okay, but I didn't do that. I wasn't expecting price to get back to this level, so I'm going to take that out. There's a fair value gap right here. There's a fair value gap right here. So which fair value gap we price tap into? You can see that it actually went high enough to tap into this mid fair value gap right here. However, there's also a fair value gap above here. So if you had kept your fair value gap above here, you would have missed the trade. What I did was that I kept my Fibonacci level. I bought my Fibonacci retracement tool, right? Many people talk about Fibonacci retracement and how it's shitty and everything, but I don't believe in all those rubbish, right? So from that high to this low, you can see that the Fibonacci retracement aligns perfectly with this fair value gap. So my entry was on the Fib level, right? So it's a sniper entry. My stop loss was just above here. So I'm going to adjust it real quick to make it perfect. And my target was 2 hour actually. So I targeted 2 hour. Price tapped it. It was a sniper entry, right? And then price broke lower to the downside. Now, I was looking to catch a continuation trade because I saw this retracement and I knew that price was going to get to this level, right? That for my analysis, of course, we don't really know what's going to happen, but for my analysis, I anticipated price getting to these equal lows. So then I asked the question, from where? So I saw this fair value gap right here, right? So this fair value gap was actually the region where I was looking at that price should retrace from. We can see that it has two other blocks, right? That's another block. These two candles are one other block. Price broke lower, broke below this low. You can then put a market structure shift. You can see close below it with a body. So that indicates that bearish structure is forming. So I kept my entry here, sold right here, kept my stop loss above these highs, above these highs. So you can see that price cleared me out, took me out of the trade. But then I have a simple rule. Okay, I was targeting this exact level. I have a very simple rule. When I'm trying to get a continuation trade, I usually put my stop loss above the swing high that is formed, right? So I broke that rule here, and that's why I got stopped out. So price came and swept liquidity from this high, but it respected these highs. So after this low got taken out, let's leave that on the chart. I marked out these highs, this level, as a zone of liquidity where price came to sweep, right? Liquidity. And then I entered, immediately price taps that level. So yeah, I took a re-entry and it's going all the way up there. Why? Come down here. All right, so at this exact level, and I targeted 4R just like this. So you can see that this one played out, right? I could have easily avoided this loss if I had stuck to my rule of putting my stop loss above the swing highs. But then this one was a beautiful opportunity as well. You can see that it was a 4 hour trade. And after a couple of hours, right, from let's say mm, price tapped the stop loss, right? The take profit, sorry, after 10 hours. So after 10 hours, this trade had already played out. You can see that price tagged me out for 2 hour, and this one played out first. Price took me out for 4 hour. So altogether it was a I lost this trade. So it was a 5 hour trade, right? 4 hour here, 2 hour here, and minus 1 hour here. So that was a very beautiful trade. And you can see that price continued trickling its way down to this level and even beyond. So if I targeted all the way down here, that would have also been a good trade, right? So you can see it's very, very crazy. But usually we don't know when these things are going to happen. So we just stick to our plan. You can see I haven't got a 10 hour from this trade. Bloody diabolical. Anyways, so we don't really know when these things are going to happen. So we stick to our plan and we trade what our plan tells us to trade. So that was what happened on this day, Children's Day, and it was a very beautiful, beautiful day in the market. So thank you for watching, guys. I really appreciate, and leave a like, subscribe, please leave a comment as well, and share this video to as many traders you know that will need it. Styles out.